Welcome into the Crypto Bunker podcast. I just wanted to give you guys a scenario that I've been thinking about for crypto, and I'm just going to read it off because, I was just watching this video with Bankless and Benjamin Cowan, and, he's bullish on ETH. He's bullish on ETH versus Bitcoin, etc., versus alts. But I just don't think he's bullish enough. And I think that what's going to happen here is there's going to be a separation of, first of all, long-term holders. Second of all, between long-term holders and traders. And the traders, the traditional 4-year cycle traders, are eventually going to be wiped out one way or another. It's going to happen. It has to happen to Unfortunately, it's unfortunate, but there will be a transfer of assets from those 4-year cycle traders, which there is a lot of, to stronger long-term holders and to new institutions, banks, hedge funds, etc. So this is my scenario that I wanted to share. So if you want to put on your tinfoil hat with me, go ahead and do so now. But so the macro is a perfect setup for 2026. And I basically say that people like Ben will sell the top in 2025, the top, then proceed to watch it go down 30%, and then to watch it go down or go up much higher in 2026. I don't know if this is how it's going to play out exactly. It might not. I think it's possible that we get a rally into year end and people think that's the end, but it's really just the beginning. So the macro is a perfect setup for 2026. Taxes are lowered for the rich for 2026 and 2027 tax season. Now that's basically just the taxes they have to pay in 2027 are based on 2026 trading. So they're going to buy more assets than they usually would because of the tax break that they're going to get for the 2027 taxes. Taxes lowered, currency debasement is on full display already, and it will continue because it has to boost growth. Data center and AI build out. Data center and AI build out and AI advancement kicking into full gear. Midterms will create a scenario where Trump and Basant will pump the markets. The new Fed chair coming in 2026 will cut rates potentially much more than people think, creating the perfect scenario for running it hot for growth. And DeFi does much better as rates are going lower because it offers higher yield. RWAs and stablecoins will be coming on chain more plausibly in 26 and 27, as many firms have to do due diligence for many months. So 2025 will only be a preview. I really think that this will just continue to be more and more each year, regardless of what the media, the news, the charts telling you. These things will continue to proliferate. So really you have to just watch DeFi Llama and things like that, where you're tracking the amount of assets coming on chain. And that's really what you want to look at. You want to look at the total value that Ethereum is securing, and that will guide you as to where we are. And if the Ethereum price gets too far away from the total value locked on Ethereum, which we can look at in a minute, that's when you potentially want to look at trimming. So there's still a possibility of a Bitcoin reserve in 2026 or Bitcoin bond backing for the 250th anniversary of the country. There's already been rumors about gold being backed in that scenario, so that's something to watch. And then I sort of get into more conspiratorial. So I say 30K Ethereum January 2027, because ETH is usually ETH traditionally tops in January, at least for 2017. Which was the big boom cycle for ETH. So Ethereum always does well in January. It doesn't do as well in December. And Ben has been great at highlighting that. So I expect this December to be a little choppy. It might not though, because in 2020 it just kind of kept going higher in December. And my opinion is that we are actually more close to DeFi summer 2020, and that the April low that we just saw was similar to the COVID low in 2020. So we're going to take a look at the charts to confirm that. Um, and so yeah, let's just get beyond. But I do think that 2027 could be a risk off. We already heard the Poland prime minister, or whatever they call that person there, the head person, say like war with Russia 2027, with NATO. We see NATO buying billions of dollars of US defense, which Trump sort of negotiated some kind of deal in terms of that. And then we see Trump already sending like nuclear submarines to the Russia area. So, there, and Putin is kind of advancing on Ukraine more and more. So the powers that be do not want to give up that land and that area to Russia, especially since Trump did that special minerals negotiation as well with Ukraine. So now he's sort of beholden to that. So there's a lot that goes into it. There's a military build out happening right now for the US and for the West in general, where we just don't have the missiles. We don't have the firepower right now. So it's really a time of peace. But peace in today's world, unfortunately, terribly, is always followed by some kind of military engagement. And we're spending like $1 trillion as part of the big ugly bill, where we're spending $1 trillion on defense as part of that, which is the biggest ever. So, once you create the toys, you're going to want to use them. That's basically what's going to happen. So we have to be aware that that's in play. But I don't think it's in play before the midterms, because Trump knows that that's political suicide. No one wants to go to war. But I believe he wants to stay in power for longer than 2028. And so for him to do that, he's going to have to get into some kind of major conflict, where he could announce emergency powers to stay in power. So that's another loophole that he can use, that they already are talking about, like using loopholes to keep him in power. So that's a lot to cover there. Let's look at the ETH chart. So again, my scenario is that this low was the 2020 low, essentially. We can compare it on the chart to the low in 2020 here. It was pretty similar. You can see that spike lower. You can even see the comparison. If you look at this here, right, when we rallied up, that's very similar to this whole thing here. Then we took a rally down. We took a rally down. Then we popped up, but not a higher high. Then we crashed through the floor. Crashed through the floor. Right? So that's kind of what we're looking at here. And I also want to look at the weekly moving averages. So when we look at the weekly moving averages, we understand how close we are to a top, right? So when we look at these moving averages, we want them to be in order from 20, 50, 100, 150, or whatever your preferred thing is. It could be 50. For me, it's 50, 100, or is it? No, it's 20. And then I believe it's 20, 50, 100, 200. So there's no 150 there. So this is actually 100 week and then 200. So you want them to be wide. So the top here came, when these were really wide, right? So, the top, when these were really wide. Right now, we're in the perfect accumulation range. So we are super skinny. We're right there. So look at the difference between this and those weekly moving averages here, right? We're not even close. Now we're closer in that scenario to, again, where we were back in 2020, right? We were very skinny, August 2020, right? 5 years ago. So that's where I see that we're at. And if you want to compare them on the chart, you can see that it's pretty similar, right? That's a pretty similar correction that we went over, and now even the recovery is pretty similar. So what I think we're looking at here is a choppy range for Ethereum where we're not going to crash back down. We're not going to get rejected, but we are going to chop. And I think that this chopping will create a very nice opportunity for investors to get in. So people that are in, the retail crowd, like myself, who are just accumulating and just kind of putting dollar cost averaging in, this is going to be the time you want to do it in the next couple months here, because traditionally also Bitcoin and crypto in general does not do well in September. So when we're looking at that, we want to factor that in. August and September are choppy waters for crypto. So what we're looking at is essentially where these moving averages are still out of order, right? So the moving averages right now, the 20 weeks not even on the top. So that's a massive thing. We also have the 200 week, which is, they're very skinny. And so we've had a great accumulation range really throughout all of this area. Even here, we got a little bit wide. And so that's kind of where that top came in, but it still wasn't even in order. So this has all just been a really good accumulation, but a long accumulation has to be followed by an expansion. There's a lot of people who've been accumulating through this range, and they're not going to sell in this range. So it needs to break higher. So I think what will happen is that we'll see this correction and we will come down to the 20-week moving averages. Now that is your signal to potentially, if the moving averages, the SMAs are in order, they start to come in order where it's, yellow, orange, darker orange, red for these SMAs, and it's still skinny and it corrects down and it hits the 20-week. That is your signal where you could go low leverage long, okay, potentially. Now, let me look at the scenario, right? So we're looking at the same scenario here. We came down and tested that 20-week. We started to get in order. Here is, here is where we got fully in order. So it's even before you get in order, but once they start to move up together and you test the 20-week, that's really the signal. So it's looking like it's going to be perfectly set up for that to happen, where these are going to start to move higher through this whole range. So all the way through October, November, you're going to get good accumulation here for ETH. And then you're going to probably break the all-time high in November, December. And that's when we're off to the races next year. And I think that that's why 2026, at least for Ethereum, will probably produce a more likely top than 2025. The issue is that people like Tom Lee, Benjamin Cowan, etc., they're looking for this massive blow off top for Ethereum in 2025, which makes no sense for what the chart is telling us, what for the macro is telling us, the macro scenario that I've just laid out as well. That's not telling us that either. So we have to take what we're given with the chart. We're in a completely different place than where Bitcoin is at. Bitcoin is a little bit tougher to judge, but you can see that if we follow this pattern, we hit, 25K, 30K by next year, as assets come on chain and things like that. So it's possible that that happens. So let's look at ultrasound money and let's see how much Ethereum is locking on chain. I believe it's the security ratio, total value secured. So total value secured by ETH right now is 0.76 trillion. So 760 billion. Now that's including the ETH asset, which I'm not really going to include. So what you could say is that it's really securing 300, well, with NFTs, you could say it's securing 330 or 323 billion. And the market cap right now is around 430 billion. So again, that's how close it is. It's right there. So that's what you really have to look at. Um, I think that you have to also count layer twos in that, which I think this is doing. I want to say that this is counting that with the ERC20s, but I don't. No, I'm pretty sure that it is because that on DeFi Llama, um, you only see um, like I think 150 billion maybe on the layer one. But obviously combined, we're looking at something a lot bigger. So I would like to double check that. Let me just look on DeFi Llama real quick and see the total value locked on Ethereum. So yeah, I mean it's going up into the right for sure. Stablecoins market cap continuing to go higher. If we look at the Ethereum chain, total value locked in DeFi, 84 billion. Now that's just in DeFi. It's not necessarily the RWAs, all that type of stuff, etc. Um, so yeah, there's a lot to look at within this. RWAs, there's, 12 billion. If we look at RWAs on Ethereum, it's most of the RWAs are on Ethereum, which is 10 billion. It's very small, very small. Now, this doesn't count stablecoins, obviously. Um, and so there's still a lot to be factored in. But, if we take all of the Ethereum chains, um, you're looking at and not just that, not just DeFi, right? Because ETH is securing the value of all of the tokens as well that are on the chain. So that's where they get that number. But when you get the RWAs coming on, this number is just going to keep going up. And that's going to create more demand for ETH because ETH has to be, in some ways, above that line because of the security issue. Technically, it should always be a little bit above the total value locked. And if we have all of these tokenizations coming in, which I think we will, then we are looking at, ETH going up a massive amount and really, trillions of dollars could come on chain. And so just be aware that, that could happen. We can look at the Bitcoin chart real quick as well. Let me see if I still have. So, okay, so this is another scenario just to throw this out there, but basically this chart is the gold ETF when it first launched compared to the Bitcoin ETF when it was first launched, both iShares, both BlackRock. We are basically following that same exact pattern when you put them over each other. And if you look at that, you can say April 2026, we would be right around, it would be about 125% gain, which from here is about $270,000 Bitcoin by April 2026, according to this BlackRock Gold ETF. And I think that, this is very possible. Now, this has us, rallying way up there in August and September, which I don't necessarily think is right. So it could be thrown off a little bit. But again, this is something to watch. This is an adoption chart for sure. And another crazy scenario, which I don't think I still have on here on any of my charts. But yeah, so this would also match up with the Fibonacci's. Usually you come up to the 368 or 4236 every cycle, which would put us from 250 to 290K. And so that kind of matches up as well with the traditional Fibonacci that you would draw. And so, Bitcoin is still super, like it really has not gone up. Like it's just going sideways essentially. It hasn't had like the blow off top that we always get. So, that can last, months really. Like this blow off top, it lasted months and months and months. And it took us very far away from the 20-week moving average. And if you look at the skinniness of the moving averages, you can say that we're not even close to the width, the height that we need to get us a top here. So we are really, in my eyes, we're sort of closer to, if you look at, we can line this up with the 2020 as well, but we're sort of like still in that type of range there, um, where like if you make it a little bit skinnier and here, you can see that it's very similar to where we were at in 2020. So and that would match us up with, around 300K as well. And it would also match the correction that we're getting, which, in the accumulation in August and September. So I do very much expect to chop in this range, not make a new high until October, November, where we will then start to see the real blow off top into next year. Because again, that is where, companies are still having to do their due diligence, family offices, institutions. A lot of them wait to put money in until January, especially when you have the taxes, which are going to be more favorable for that 2026 trade. So that's when you really get that blow off top. You really get that all that investment coming in at once. In that, and that's what I think we're going to see in January 2026. So hopefully that was helpful. If it was, please like, subscribe to the channel. Trying to make more content on here going forward. So I appreciate you, and have a great day.